And as I mentioned, I'm looking at S&P 100 stocks generally with low to average PE multiples. Again, I'm trying to stay out of the risk pool here. This is investing using options as opposed to trading options in a rapid sort of way. It's just another strategy that I've deployed over the years. And there's the key, guys. I am never in a rush to make money. This is a long marathon for me. And if I can grow my account over a day, a week, a month, a year, 10 years, it's all fine for me. It's just never can make rash decisions when it comes to making money using other people's knowledge. I don't have time personally to be a better analyst than those that are getting paid. However, what I'm not willing to do is take shortcuts with my own money as it relates to what type of investing I'm going to do. So my goal is to use their knowledge more efficiently and effectively to make above market returns. Hey everybody, Ernie Rapp here with the Dorian Trader. How are you today? I wanted to teach you a little bit about a topic that's near and dear to my heart, and that's what I call trading the market using other people's knowledge. So there we go. So what are we going to talk about today? Who do I follow? What's important to me, and how do I use this knowledge? So here we go. Who do I follow? So there's lots of different analysts out there. There's what are called sell side analysts, there's called buy side analysts, there's indies, independent analysts, and boy, up and coming pretty fast in the marketplace this year is artificial intelligence recommendations, quantitative trading or quant trading recommendations, and a host of people out there, pontificating their crystal ball associated with what they think a stock or a particular market is going to do. So before I get, let's talk about the who generically, and then we'll talk about the who specifically. But sell side analysts, what do? They create primary in-depth research. So these guys are out there, talking to customers, talking to the company, talking to manufacturers, probably vendors of that company, just looking at ways to understand whether or not they have a handle on the marketplace in depth. So they're not just looking at other people's information, they're talking to customers, vendors, they're looking at the marketplace top and bottom, and they're writing up that research and they're selling it to investment banks, brokerage houses, individuals, and institutional investors. What's the buy side do? Now, the buy side analysts are guys that are doing shorter reports, taking the sell side analyst information, pooling it with some of their own thoughts, right? And when I use the word pool, they probably cover a lot of different uh, underlying stocks, where the sell side spends more time in depth with certain companies or certain industries. The buy side guys and gals are going to have a bundle of stocks that they're covering. They're going to put out limited briefs, two pagers, one pagers, recommendations. So they're using other people's information, crunching a bunch of numbers, and coming up with here's what they think. And then, of course, there's the indies, right? The independent guys that are not employed by the brokerage houses, the iBanks. They theoretically have their research out there, has no conflict of interest. They're just looking at everything that they can get their hands on, probably doing a little sell side research, doing a little buy side research, but really they're not beholden to anybody other than themselves. And their record, if you will, should speak volumes to whether or not they're making good choices for you as an investor. Now, I'm covering this from the concept of using options in the marketplace, but we'll get to that in just one second. The reality of all these analysts, they're all making predictions on the value of a company's stock. All are getting paid. That's the key point. They're getting paid to have a crystal ball. So who is the best, right? So there's a website out there called TipRanks. This is a crowdsourcing website of all these different analysts that post their recommendations. It's free. You can look at it. There's got a paid version as well. But here's what they said. The top or the best 25 performing analysts amongst pools of thousands, right? Based upon if they put 10 recommendations out, 67.6, or call it 6.5, 7 out of 10 of their recommendations are profitable over a 1 year period of time. That's the top 25 analysts. Now, when it gets down into the pool of thousands, right, some are going to be average, some are going to be below average, but just put a perspective on that and you'll understand why and what that means to me, right? And so their average return, the top 25 for 2020, this is just quoted out of an article from TipRanks, was they outperformed the S&P 500 by 21%. So what does that mean? If the S&P went up 10% in a year, they went up 12%. So 12.1%, give or take. So they do okay. All right, so here's my initial conclusions. I don't have time personally to be a better analyst than those that are getting paid. However, what I'm not willing to do is take shortcuts with my own money as it relates to what type of investing I'm going to do. So my goal is to use their knowledge more efficiently and effectively to make above market returns. And so far, so good from my experience over the years. So who are some of the who's and how do I use them? Well, I'm just going to throw up a few of these guys and talk a little briefly about all these different ones and what I'm looking for. CFRA, they make recommendations. They're actually humans in there. I think they're fairly independent. I could be wrong, but they're fairly independent as it relates to their information. And again, check this for yourself. This is that disclosure I should have said in the very front. This is not investment advice. Seek your own information, do your own research. This is just how I use other people's money to make investment decisions. So TipRanks is another one. They're going to aggregate or crowdsource lots of different analysts and give you information. Seeking Alpha, that's got a lot of information from Seeking Alpha analysts, Wall Street analysts, quant analysts, CNBC, Investing Club with Jim Cramer. He's always good for general knowledge. He's got a trust of 40 or 50 stocks that he follows and makes recommendations on. Investing.com has got a lot of great information. There's hundreds of these things out there. You have to pick the ones that make sense to you. These are just a few of the ones that I follow very closely. So here's CFRA. This is what a report might look like. This is a Microsoft strong buy recently where it was basically saying it was selling at 328 when they did the report. They think the 12-month target price is 427. There's some of their concepts of why they think the investment rationale is a strong buy. And I'm reading all this stuff. So TipRanks, here's another one. So in the last 90 days when I shot this, 16 different analysts collectively came up with a moderate buy with a high of 150 and a low of 102, average of 115, 13 on Starbucks. So I'm just looking at ways of using other people's knowledge because I, again, don't have the time to do the in-depth primary research that I would love to. Seeking Alpha, this is a great website, but this particular chart I love. So this is an analysis of the price target of a bunch of Wall Street analysts versus the actual price of the stock. And you can see here on McDonald's, right, that orange line is what the analyst over time is thinking the price is going to be. And you can see the actual price is floating somewhere underneath where the analyst. So that tells me there's some optimism in the marketplace of all the analysts, which might be a clue on how I might play this particular stock. Here's Jim Cramer's. He's got a portfolio. Again, he's doing pretty well this year, but you know, he comes out with lots of different analysis live on TV, well as the Investing Club. Now that's something that you have to pay for. Investing.com is an economic calendar. It's going to show on a daily, weekly, monthly basis all these different things that might be important to the marketplace. So three big stars, CPI coming out, that's going to be potentially market moving. Some of these one stars may or may not move the market, but it's good to know what's going on as you place your trades. All right, so who and how, and here it is. So how do I use all this knowledge? This is the next phase into it. So I sell naked options, calls and puts for premium with long dated expiration dates. I manage that portfolio of options, those underlyings, by individual deltas as well as a beta weighted portfolio delta close to zero against the SPX. Now, if you're new to trading, that might sound a little foreign, but if you're familiar with option trading, you should understand exactly what I'm saying there. And those are really critical in my management techniques associated with a pool of underlying stocks, S&P 100s typically, beta weighted to the SPX to near zero, and then of course my delta levels for calls and puts, naked options, are as low as I can get them based on a bunch of other conditions which we don't have time for today, but this is how I'm trading it. And as I mentioned, I'm looking at S&P 100 stocks generally with low to average PE multiples. Again, I'm trying to stay out of the risk pool here. This is investing using options as opposed to trading options in a rapid sort of way. It's just another strategy that I've deployed over the years. And there's the key, guys. I am never in a rush to make money. This is a long marathon for me. And if I can grow my account over a day, a week, a month, a year, 10 years, it's all fine for me. It's just, never can make rash decisions when it comes to making money using other people's knowledge. So here's an example trade that I made, right? This is Home Depot. This is a 1 year graph of Home Depot trading in a range, if you will, on the recent basis, right about in here. over the 1 year, had a high of 347 and a low of 256. So from a naked put perspective over a long-term basis, here's what I'm trying to do. I'm trying to get below the low, and I'm trying to get way, way above the high. And so that was a 265 put in June, perhaps something like that, and a 390, 395 call. The goal here is for this thing to wiggle around in this area, never get up here and never go down here. And if that's the case, I'm a winner over my long haul. But I'm managing those and I can adjust them along the way. But one of the tools that I created is an Excel spreadsheet where I download information from my trading platform, Thinkorswim, and or TastyTrades. And here's what it looks like. This is how I manage the individual deltas. So this is a particular snapshot, and this is a export out of Thinkorswim right into Excel. Happens like pretty quickly. It has my positions, it has my net lick, it has kind of what I have the delta range. This whole yellow area is what I call the risk area. If things are starting to pop up in here, that's the risk area. I need to adjust this. This happens to be a covered call on Kroger, so I don't really have risk, so to speak. But you can see I'm out of my own personal risk area on all this. These are puts on this side. These are calls on this side. I've got a little bitty hedge position on Meta against a few other positions. They're at the 15 and the 21 delta. It's just a graphical way to look at how I'm managing all my different positions. This happens super rapid, super fast. Anyway, that's a quick version of how I use other people's knowledge. I'm leaving you with what I call Ask Me Anything. Here's my email, Ernie@DorianWay.com. And if you're interested in that Excel spreadsheet and want to learn more about how I use it, and if you want a copy of it, well, just hit me at Ernie@DorianWay and put in the subject line Delta spreadsheet, and I'll send you a free copy of that. Listen, I appreciate you guys listening in. I hope that was helpful. How to trade the market using other people's knowledge. You guys have a great day. Take care. Ernie Rapp from the Dorian Trader.